Me. Nvidia, yeah, obviously they're doing quite well at the moment, and I expect that to continue. There is no shortage of demand for AI and where it's going in computing and companies that need their hardware. So I think they're positioned very well. We are seeing a lot of effects already, starting with AI in the workplace. The latest round of layoffs through a lot of the tech companies have been focused on AI. That is, they are trying to replace workers with AI, and this includes gaming with Microsoft and their Xbox console. So we're starting to really start to have the impacts here, I think, of what AI is going to mean for companies who are really just very excited, unfortunately, to replace workers with AI because there's so much potential here for productivity. Nvidia, though, they're still the king of doing hardware. I still say there's a little bit to be concerned with the administration and tariffs. Of course, China is also a looming threat there as well. They've been able to, with DeepSeek, it looks like cheat a little bit in the sense that they don't have to require as much hardware to get the job done. And we're going to see, I think, a lot of innovation here in this space. But what may end up happening is you see a lot of small companies coming up, doing some great innovation or some breakthrough, and then quickly getting swallowed up by some of these bigger companies who are going to, absolutely need that technology. This is a race. Which country gets there first? And I don't even know where there is, but we are seeing some really big gains here in AI, especially in the PC market as well.
Daniel, maybe
it's not a good idea to own just one stock. That would make someone under-diversified, which is much too dangerous. However, imagining which stock someone should own in this situation might be a helpful cognitive exercise. I am certain that I would choose Nvidia. This is the reason. Let's start by reviewing what has led Nvidia to this point. Its significant position in the rapidly expanding artificial intelligence, AI ecosystem. AI models are trained and implemented using graphics processing units, GPUs, which are designed and marketed by Nvidia. Additionally, Nvidia's data center business, which includes its AI chip business, has grown rapidly in tandem with the use and adoption of AI models. Approximately 89% of Nvidia's total revenue, or $39 billion, came from its data center sector in the most recent quarter, which ended on April 27th. Furthermore, as the applications for AI models increase, projections of Nvidia's total addressable market, TAM, keep rising. For instance, Bank of America analysts predict that the growth of AI business models could push Nvidia's TAM over $2 trillion. How soon might Nvidia be able to take advantage of this profitable market? The majority of analysts say soon. This fiscal year, which ends on January 26, 2026, should see Nvidia's total yearly income increase to $200 billion, according to forecasts put together by analysts. That is a 53% rise from the previous year. In addition, analysts predict that Nvidia will generate $250 billion in revenue in the upcoming fiscal year. In other words, Nvidia should have no shortage of fuel thanks to the AI revolution. But when it comes to Nvidia, investors shouldn't take a short-sighted view. Indeed, the most well-known AI systems at the moment are big language models like ChatGPT, but other systems will appear. Specifically, the development of autonomous cars and robots is rapidly gaining momentum. Amazon revealed in recent weeks that more than 1 million AI-powered robots currently operate in its fulfillment hubs. Nowadays, the corporation employs more robots than people in these sites. In the meantime, both Tesla and Waymo, owned by Alphabet, now provide autonomous transportation with the launch of their new robotaxi service. It goes without saying that Nvidia will have a huge opportunity with the installation of millions of robots and robotaxis. These sophisticated robotic network firms require a significant amount of processing power. They will need to expand their AI infrastructure in tandem with their robotic networks. Currently, there are 2 excellent reasons to acquire Nvidia stock. First, Nvidia has lots of space to expand in the upcoming years, as seen by its massive $2 trillion TAM. Second, as cutting-edge technologies like robotics and driverless cars grow, its TAM may even broaden. Therefore, even though I don't support investors holding just one stock, if I had to buy and hold just one, I would go with Nvidia right now. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video. In recent years, Nvidia has emerged as one of the top assets to hold. Though it has been beneficial, it is evident from comparing the stock's performance in 2023 and 2024 that the second half of the year hasn't been as robust as the first. Nvidia didn't have a stellar first half in 2025, but can it turn that around and have a terrible second half? Let's investigate. Because of its participation in the artificial intelligence, AI arms race, Nvidia has grown to become the largest corporation in the world by market value. With a 90% market share in the data center industry, its graphics processing units, GPUs, are the best choice in their category. In the hardware industry, such degree of dominance is practically unheard of, yet Nvidia's GPUs are still at the top. It continues to grow at a high rate as well. Revenue rose 69% year-over-year in the fiscal first quarter, which concluded on April 27th, and management forecasted a 50% growth in Q2. But one modification made Nvidia's performance less impressive than anticipated. Chinese export laws pertaining to Nvidia's H20 chips were modified by the Trump administration in order to comply with previous export laws created during the Biden administration. As a result, Nvidia lost an estimated $8 billion in Q2 and $2.5 billion in Q1 revenue. Although it's a major setback, Nvidia might still be able to sell these H20 processors to some customers who are looking for a less expensive substitute for their main product. Additionally, access to Nvidia's GPUs may be discussed amid the ongoing trade negotiations between the United States and China. Nvidia's stock may soar in the latter half of 2025 if China strikes a deal that gives it access to these GPUs. Although it's not a given, this would significantly boost Nvidia's stock price. Another possibility is for Europe to replace China. In terms of AI adoption, Europe has trailed well behind China and the United States, but this trend might be changing. In addition to the United States' unquenchable need for top-tier processing power, Nvidia may see substantial growth from the AI boom in Europe, which CEO Jensen Huang laid out the foundation for. The stock might also skyrocket if this begins to have an impact on Nvidia's financial situation in the second part of the year. Last but not least, during forthcoming quarterly conference calls, businesses will begin to hint at 2026 capital expenditures. Nvidia's stock may rise if record data center capital expenditures are made again, since this would show that the company's GPUs are still in great demand in the US. Although the market is waiting to see, Nvidia's next products have a lot of potential growth catalysts. The second half of 2025 would be a fantastic moment to buy Nvidia stock if indications begin to emerge that the company may enjoy significant growth in 2026. Even though the stock is currently 37 times expected profits, it is still less expensive than it was in 2023 and 2024. Given the expectation of robust growth in 2026, investors shouldn't be shocked if Nvidia's valuation soars by year's end. I believe that at least one, if not two, of the catalysts mentioned above will materialize. Due to that combination, Nvidia's stock is expected to rise in the second half of the year, significantly outperforming its performance at the beginning of the year. Since the AI infrastructure build-out is still in its early stages, Nvidia is still one of my top stocks to purchase right now. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
And what levels are you watching this morning? Alex, seems like a little bit of a recovery underway after that initial sell-off that we saw yesterday.
Yeah, I mean, if that's the bear move, bulls got to feel pretty good about where things sit. Obviously, it's very early in the week. We know it's a week that's going to be very headline-driven, as we talked about yesterday, Sam, and it proved to be that way yesterday, as it was a very quiet session that saw volatility wake up with some of those trade announcements that we got. If we could pull up the first chart I sent over, it's an intraday look at the S&P 500 using the same system that we talked about yesterday. Just for kind of a visual awareness, I like to use sort of this stoplight system, resistance in red, sort of the neutral balance point line, and the yellow, the slow down kind of line, and then green as potential support, much like you see with a traffic light. Yesterday, the 6250 line was, one of the lines in the sand that we watched, and that broke early in the session. And then we spent most of the day hanging around 62.25, which of course is that yellow line. The lows of yesterday's session were just above 6,200. To me, that's the line in the sand that bulls want to make sure holds at the very lowest here intraday for the S&P 500. Now, that's about 31 points below where we are right now. So it would be about a 0.5% sell-off for us to get back down to yesterday's lows. And of course, you have that sort of balance point in the middle that could act as some short-term, near-term support here intraday around 62.25.
You know, speaking to Bob Lang yesterday, who sort of suggested that it's not surprising to see a bit of a mild correction, particularly heading into an earnings season, which is just around the corner. And of course, there has been some people sort of describing what we saw yesterday as just pure exhaustion, not putting it really down to any reason right now. But then I've also seen out from the folks at Goldman Sachs now raising their S&P 500 valuation and return forecast. They're looking at 12-month period up 11%, 6,900. What sort of trends are you seeing right now in the S&P 500?
Yeah, it's a good question because you read so much, Sam, about how hated this rally's been and how it's been very retail driven and institutions haven't participated to the same extent. And the big question is, what does that mean? Does that mean that we're due for some sort of pullback? Possibly, but does it also mean that institutions are going to look for any opportunity to get back in? This is the last 3 months of the S&P 500, which essentially is the rally from the lows conveniently. What I see is a trend that is still very much a bullish one and very much intact. For a very short-term indicator, something that's quite simple to add to a chart and think about is the relationship between a 1-week or 5-day EMA and a 1-month or 21-day EMA. I talked about how if this was a little bit larger chart, it would have shown a crossover in late February of this year in which the 1 week went below the 1 month. If you just use that as your only indicator, it would have kept you out of the market, basically avoiding the whole drawdown until April 25th. Yeah, so you would have missed a little bit of the early parts of the recovery, but would have got you out around 6,000 and would have got you back in around 5,400. Since it's crossed back over on the April 25th or late April, it has not gone back into that bearish formation. So still a very bullish trend just by that indicator. We're above both of those lines when you're looking at